Hi, everybody. This is Alex Fensky, the lead agent for the Chicago Southland Homes team at Keller Williams Realty, and coming to you here with the March 2023 housing market update, covering the northeastern Illinois metro market. So basically, the extended Chicagoland area. I want to go through some important metrics and what they would mean for you if you're interested in the housing market. You're thinking about buying a home, selling a home, you're an investor, or maybe you're just curious. So feel free to reach out to me directly. Send a message on wherever you're watching this video, or navigate to our Facebook page, Google us, whatever you want to do, Chicago Southland Homes. We'd love to hear from you and how we can help you or how we can make these reports better. So with that said, there's a few things we're going to hit. We're going to talk about housing affordability. We're going to talk about some of the important market metrics that measure supply and demand, mortgage rates, and then kind of a summary. So that's what we're going to cover. First off, housing affordability. Housing affordability is really important because this is what has caused the big slowdown in the real estate market that everyone's talking about. And it's maybe not a slowdown the way you think, but demand has dropped off quite a lot, and it was housing affordability that was responsible. It takes into account the price of homes, the cost of borrowing mortgage money, and wages. So when all those three things are changing, the amount of someone's monthly income that is required to make a mortgage payment affects their willingness and ability to buy a home and for how much money they're able to pay for it. And housing affordability went way down pretty fast throughout the tail end of the boom that we saw here after COVID. And actually, it was because of increased housing affordability that boom happened to begin with, because interest rates were low, housing prices were reasonable, and everyone all of a sudden had a bunch of extra money. Wages started going up on average after the original, few months there where things were real shaky. And so affordability caused this run up, and affordability has caused it to soften down. Right now, what's happened is that in the fourth quarter of 2022, the housing affordability index actually went up a little bit, meaning it made homes more affordable, which was nice because it actually crossed back over the index threshold, meaning it got back to where it had started at the 100 index, which means that someone earning the median amount of money could buy a median priced home, and the principal and interest on the mortgage would be a quarter of their income. That's how they measure it. So it actually got back to that point. The Midwest affordability index, the Midwest region, it's always higher than the other regions. So housing is more affordable in the Midwest than anywhere else. And our index was right about 140, up from 130. So it went up about 10 points. Let's talk about the amount of supply. So how many sellers are selling homes? New listings were down about a quarter this February compared to last. And it was actually the lowest number of new listings of any February that we have on record. So let's take a look at that. Here's our new listings. And we're looking at a 10-year chart here. Here's February. It was the lowest February. If you go back every month, that low month that you're seeing is December. December is typically the lowest month of the year for new listings, and it was this year, but it was the lowest. So we got some really low new listing numbers. A lot of people aren't putting their homes on the market right now for various different reasons. The most startling statistic, I think, maybe in this entire report is homes for sale. Homes for sale, you see that down there? That is an all-time record low as far back as my numbers go. I can even go back, look at this in context, all the way to 2008. We are at an all-time record low number of homes for sale. So when people tell you that this is a repeat of 08 and the market is crashing, understand that right now in the entirety of northeastern Illinois, there's fewer than 14,000 homes for sale. And in 2008, there was 110,000 homes for sale. So when we say that there's not enough inventory, that's for real. Let's look at a little bit of demand. How we measure demand is the number of pending contracts. Every pending contract takes a buyer. And our pending contracts are down. They're just not down to record lows. They're down about 18% over last year. And so our contracts look more like they did about 10 years ago. This is a seasonalized 12-month rolling average. So you can see that taking a 12-month rolling average, aside from the COVID era, which is all this, pending contracts, buyer demand is about what it was for this whole 10-year market cycle before COVID. So demand is actually okay. It's not like it was the last couple of years, but that was off the charts. Um, let's also take a look at closed sales. Closed sales, that chart's going to look really similar. We did have a pretty low month in our MLS last month, but that's probably an apparition. That's probably going to level out here as we head into March. What I like to look at is the relationship between supply and demand, because they're both changing. So if supply drops a lot and demand drops a lot, are we really in the same boat? Well, largely we are. We like to look at months of housing supply. And so let's get off of this long-term chart here. Months of housing supply says if homes keep selling at the pace that they're selling, if the pace of sales were to stay constant, and we take the number of homes that are on the market now, how many months would it take for buyers to buy up all the existing inventory? 4 to 6 months is a balanced market where there's about enough homes for the number of buyers. It's pretty even. If supply was longer than 6 months, that'd be a buyer's market where there's a lot of homes available and there's not that many buyers, so they really got their pick. If supply is it's shorter than 4 months, it's a seller's market. It means that buyers are scrambling to get a home. And you can see right now we're sitting at 1.4 months of housing supply on a monthly basis. If you take a seasonalized average, it's been 1.8, 1.7, 1.8, dating all the way back to January of 2022. It hasn't changed. So people are saying, oh my gosh, the market inventory is skyrocketing. No, inventory is at a literal record low. It's never been lower. Demand is falling off. Well, some, but not enough, because it's still a wicked seller's market. 1.8 months of housing supply. There's not enough homes available for the buyers who are here. So I think that's a really important thing to look at. And there's another metric that shows you the same thing, which is how many days does it take to get to a contract? Look at that. It's been flat since September 2021. Days to contract has been at 9, 8, 9, 9. It hasn't changed. That's probably not what you're hearing in the news. And I don't know where the news is getting their information, but it's not quite as local as this. And this is not quite as local as you need if you're actually going to put a home on the market or you're going to buy a home, because this is all the Chicagoland metro area. So I would want to do a market analysis for you in the towns that you're looking, because they don't all look like this. I'll tell you that right now. There are places right now that have over 4 months of housing supply in our markets, but there's also places with less than 1 month. So I know you all want to know about prices. So let's take a look at prices. You can see here that seasonalized median sale prices have been flat for quite some time, about 7 months. Those prices haven't changed. Month over month, home prices are down slightly. Like when I look at this February compared to last February, they're down 1.8%. And that's been the case for about 4 months. They've been down by about 2% compared to the same month last year. But again, seasonal things are always at play. Long story short is housing prices have been flat for several months now. Now you might say, well, hey, Alex, I thought you said that there's not enough homes for all the buyers that want one. Doesn't that mean that prices should be going up? Typically it does. Yes. Typically, if you showed me a market with 1.4 to 1.8 months of supply, I would say prices should absolutely be going up, probably at a rate of 8 to 10% annually. They're not. They're flat as a pancake. Why? Because the primary thing that's driving this change is mortgage rate increases and volatility. And with that said, today's mortgage rates on March 3rd of 2023, your 30-year fixed rate mortgage is running at 6.97%. It's a full point higher than it was a month ago. And we've seen in the last year, since mortgage rates started getting real volatile, we've seen 4 or 5 times rates go up or down by a full point just in the span of 30 days. And that's an extreme amount of volatility that we haven't seen in the last couple of decades. So that's going to continue until inflation is under control, until the Federal Reserve announcements are able to stabilize and they can stop raising the target rate, which they're doing because of inflation. Until that stuff is under control and the economy is a little bit more stable, mortgage rates are going to continue to be volatile, and it's going to depend on what month you buy. So what should you do about it? Well, number one, if you're a seller, you have to know that you do have the upper hand in terms of the market balance, but you can't price like it. You have to price like it's a balanced market, because pricing is functioning as though it is. So it's important to know that you're not in a bad spot, but you have to price flat. You can't price optimistically anymore. And for buyers, if you can compete, if you can afford to compete on price, because there's still lots of multiple offer situations, if you can afford to compete on price, do it. You'll probably win. Unlike a couple of years ago when it seemed like no matter how much you offered, you couldn't win. If you can compete on price today, you'll probably win. If you can't, you're going to have to compete on everything else. The amount of earnest money, the closing date, post-closing possession, down payment, financing type, whatever other concessions can be there as is. You're going to have to compete on all that stuff if you can't afford to compete on price. Of course, at the end of the day, you need individualized advice. And so you should contact us, Chicago Southland Homes. Go to our website, Facebook, Instagram, wherever you want to find us, YouTube, and let us know what you're working on and how we can help. We'll look forward to giving you a customized analysis of the market that you're participating in. Thanks and have a great day.